I'm kind of thinking Bitcoin finishes this cycle closer to 250,000. Global debt is 400% of global GDP. Whatever you think you own, you don't actually own. It can be taken away from you. Bitcoin finishes 150 to 250,000. I.e. it does a few X the last all-time highs. So I want people to understand that everything humans do is basically a contract. All societies are organized by contracts. What is this smart contract business?
Raoul Pal, the co-founder and CEO of Real Vision, and a former hedge fund manager, Goldman Sachs executive, and a crypto investor. In this video, Raoul will share his insights on how can crypto owners influence U.S. politics, especially in California? Why does he prefer crypto over traditional stores of value like gold and silver? Why is intervention crucial to prevent financial market collapse and social catastrophe during a crisis? Don't miss this exciting and informative interview with Raoul Pal.
How I think of it, I think there's a 60% chance that it's just a normal crypto cycle. So Bitcoin finishes 150 to 250,000, i.e. it does a few X the last all-time highs. There's a 20% chance that because of the ETF and how the economic cycle works, everyone gets overexcited about rate cuts, whatever, that we kind of front load it and it's short. But then there's another 20% chance that this actually extends further than we expect because institutions and others come into the space and it broadens out. So I think 60% chance normal cycle, 20% super cycle, 20% actually a short cycle.
Coinbase, the largest U.S. crypto exchange, released a report based on a survey of voters in California, which showed that 78% of crypto owners would be more likely to support candidates who favor new and innovative technologies, and that 27% of Californians own crypto. The Treasury Department issued a report on the illicit use of virtual assets and the challenges and opportunities for combating it. The report acknowledges that the use of virtual assets for money laundering is far below the use of cash and other conventional methods, but also highlights the risks posed by ransomware scams and dark web activities.
I'm kind of thinking Bitcoin finishes this cycle closer to 250,000. I think a lot of people are lower. I think it might be higher because of the dynamics of the ETF and other stuff. I'm pegging Ethereum between 15 and 20,000, and I'm pegging Solana between 750 and 1,000.
Wait a minute, everyone. Get ready for the ultimate crypto investing website, the Bitcoin Seller. It's your golden ticket to an exclusive insiders club. Expert predictions, on-chain data, and breaking news, all for you. Imagine all crypto insights landing in your inbox daily, like having your own expert team. Don't miss this VIP opportunity. Click the link and secure your spot. Join now and ride the crypto roller coaster with the Bitcoin Seller.
So my view is Bitcoin starts the cycle and outperforms in the start. Then people go out the risk curve, ETH. We're going to have an ETH ETF. We'll see the market pick up there.
Right.
But the horse that's moving faster is the one that's coming from a smaller adoption base. It moves faster.
Bitcoin prices have surged above $47,000 for the first time since May 2021, driven by the approval of several Bitcoin spot ETF in the U.S. and the anticipation of more institutional adoption. The market capitalization of Bitcoin has reached over $900 billion, making it the sixth largest asset in the world.
Our actual problem is actually demographics. There's too many old people. And the old people all own equities. And they also have all the wealth. So if you were to allow the market to go down 70%, the people want, we want that bear market to show the bankers that they've done it wrong. We wipe out 70% of the wealth of America. You simply can't do it. And that's the collateral for all of the debt as well. So you blow up everything. That's what we learned in 2008, which was like, they're not going to go there. That was what Draghi did in 2012. It's like, whatever it takes, but we are not going to do that, which is the 1929 outcome. So what they're actually trying to do is rescue the baby boomers and rescue the governments who are trying to keep economic growth going with an indebted old population. So they're not trying to transfer money to the super wealthy. That was the unintended consequences. I don't think they understood what they were doing was debasing currency. And when they learned it, they're like, oh, this is magic. Let's just keep pressing the magic button. Assets go up, and we're saved from ever a debt deflation.
OECD released a report on pension markets in 2022, which showed that pension assets fell by 14% in the OECD, down to $51 trillion due to elevated inflation and higher interest rates. The report also highlighted the challenges and opportunities for pension systems in the post-pandemic recovery.
What is this smart contract business? So I want people to understand that everything humans do is basically a contract. All societies are organized by contracts. Me appearing with you was a contract over email. Even how societies work, how religions work, everything, they're contracts. Some are not that important. Like meeting a friend for a drink, you can say, hey, listen, I can't make it. Nobody's going to sue you for it. It might cost you more drinks next time, but that kind of thing. But others are really important. Insurance contracts, derivative contracts, contracts for ownership of property. All of this can now be digital, so you don't have to trust a third party. So we're away from the system of money. We're now talking about verified truth, electronically verifiable truth done by code. So that means we can then get rid of middlemen all over the place. And we've all spent too much money on lawyers. We've all spent too much money on accountants. We've all spent money with notaries. All of this stuff disappears. Things like insurance companies don't need to be insurance companies anymore. They're just contracts of payments and contracts for pooling of capital. So it can be in literally anything, from a ticket to a sports event to the most complex derivative contract in the world, can actually go on this new rails. So it's much bigger than either of us first thought when we first saw it. It's like, wow, question on everything. Global debt is 400% of global GDP. These are bananas numbers. So what does that mean? We talk about debt a lot. What it means really is the collateral, the assets, the back of the system have lots and lots of people claiming on them. So if anything goes wrong, you get a fraction of your money back. Also, we're learning that banks are now bailing in creditors. So you find that the issue in the leverage world is you actually don't think, whatever you think you own, you don't actually own. It can be taken away from you.
And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you liked the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing